Good afternoon, everyone. My name is Jen Hicks. I'm the Director of Communications and Outreach with Maine Woodland Owners, a member-supported organization focused on providing advice, resources, and support for Maine woodland owners throughout the state. Today, we are presenting our annual program. I call it Timber Tax Workshop. Jim's got the slideshow page called Forest Tax Workshop. It's all the same. It's an opportunity for woodland owners to learn more about how to manage tax obligations related to their woodland and any revenues that are generated from their woodland and their activity on their property. Jim Norris is a retired IRS forester, lives in Winthrop, Maine, and has been providing one-on-one consulting services to woodland owners for many years. And he does this as a service for our organization, and we're highly grateful. So today, Jim's going to work through a series of concepts and try to provide some on-the-ground practical information for folks who are either thinking about doing a harvest, maybe doing some cost share programming, and talking a little bit about how to manage the revenues from that, and then how to prepare, or if you've done a harvest, how you can prepare your taxes for that year. So without any further ado, I'm going to pass this on to Jim. And he is also available for a one-on-one consultation, and his information will be in the notes of this video on YouTube. And you can also reach out to us at Maine Woodland Owners at our phone and on our website, mainewoodlandowners.org. And if you're not a member yet, I would highly recommend you become a member. So those are the details, and I appreciate everybody being here. And Jim, it's all yours.
Okay. Can you hear me, Sean?
I can hear you.
We're good. Yep.
Okay, good. All right. Well, as she said, Sean, I worked for 31 years for the IRS performing natural resource valuation related activities along with what the IRS calls engineering activities. So I was basically a consultant, natural resource consultant to the IRS accountants and bill collectors. Before that, I worked for 8 years for the Maine Bureau of Taxation, dealing with the tree growth tax law. Actually, and my senior thesis in college was the Maine tree growth tax law. It was when it started, 1972. So since 1966, 65, I've been doing some private consulting. Many times it's rather simple. I do tend to try to make sure that nobody gets involved in a costly and expensive activity if it's not necessary. I do this part-time and it's very seasonal. So I don't like doing this during golf and fishing season. So let me move on here. One thing that, a Bible in my book is the U.S. Forest Service publication, Forest Landowner's Guide, Ag Handbook 731. You can download that electronically from the timbertax.org website. As Jen said, this will be recorded, so you can sit back and not be concerned about taking copious notes if you choose not to. As it's important to point out the purpose for holding timber in, which will ultimately decide how sophisticated or whether or not you have to spend any significant time and money to properly represent the appropriate capital gain. And I use, capital gain is significant in all of this because the code allows for the capital gain treatment on the sale of standing timber for individuals as opposed to corporate owners. And there's some little fuzziness and some fine details in distinguishing that. But you're dealing with everything from personal use to investment, an investment owner, which most of us are. I've got a 25-acre woodlot that I've owned for 40 years, and I've cut it 3 times, and it's been a good investment for me. Of course, I realized it at the time, but a lot of people don't realize, that they're making an investment and it could be a return from the investment. Or if in fact you're a business and, have a profit motive involved in your operation. Personal use is pretty much what it says. You're not doing things that are necessarily increasing the value of any timber that's on the property, and it's generally a residential type. I'm going to be at times kind of poo-pooing some of the things I have so we can get into the meat and real significant importance. Much of what I have here, in terms of a lot of the text, I copied and pasted from Forest Landowners Guide with their permission. So investment is just what it says. You're hoping that at some point in time you're going to realize a profit from your source of income, which is in fact the timber, other than sales of portion of the property. And of course, business, the IRS used to see it and sees it all the time. People who may have a chainsaw and a four-wheel drive pickup and say they're in the wood cutting business. And there are a lot of limitations that separate you from being a hobby, or from an actual business. I grew Christmas trees for 20 years until I realized it was not a money-making effort and very, very difficult time-wise. So, but the activity is primarily for profit, and generally speaking, it's regular. Forest land, managing forest land, many times all your activity is just paying the taxes in a particular year or trying to do some planning and improving the property and making it ready for a future harvest. I think it's important to remember there's all kinds of costs associated with owning forest land where, capital costs, obviously, if you're buying land and you're buying timber, those are both capital assets. They're assets that last beyond the current year. Deductible expenditures might be, if you're making a timber sale and you hire a forester, his cost, your out-of-pocket costs for him to mark timber or make sales for you, would currently would generally be followed in as a cost of sale. I'll get into some deductible expenditures. So you have your original costs, which include potentially multiple assets. Always we're talking about land and timber, but it could be buildings and a host of other assets that might be included in your purchase. And then adjusted basis is if you have appropriate properly classified additional costs that we'll get into, their purchase assets. if you inherit an asset, it takes on you, the fair market value of the asset becomes your basis, whether it's timber or land or otherwise. So you need to have some sense of the relative value of these assets. Assets received by a gift you acquire the donor's basis in those assets. And we won't go into a long discussion of, income tax history, but if you were to look at it and then ask your accountant in detail, you'd see the reason for it. And what we're going to be talking about a lot today is how to allocate those original, the basis of the assets involved in the acquisition. As I said earlier, capital costs can't be deducted from income in the year that they're incurred. But if they're not, they're generally involved in either capitalizing them into a timber account or capitalizing them into some sort of land account, or in the case of machinery and equipment, potentially claiming depreciation on those. But capitalization is just the act of capitalizing assets. And it's you're acquiring real property, or you're making improvements that actually increase the value of the property. This becomes a little fairly important later on in this discussion in regards to things you're doing that actually, even though they don't always have the character of capital, dollars invested in trees, but if things you're doing increase the diameter and value of the trees, you're in the process of actively managing the property. These land, timber, buildings, and machinery and equipment are capital assets. Bridges, roads, culverts, site preparation is, generally involved in reforestation, tree planting, and so forth. As I said earlier, costs associated with the purchase of timber are generally capital expenditures. If you incur costs to plant, reforestation costs are, you're creating a long-term asset. You may have some initial expenditures that might be involved, but mostly they're added to the basis of the seedlings and so forth. Again, as I said earlier, we're looking at the purchase price of or the inheritance value of timberland here, and it's going to be important that we segregate the costs. As I said earlier, basis of inherited property becomes the fair market value as of the date of death, or I don't want to get into federal estate tax, but there are opportunities for an alternate valuation date given certain circumstances. As I said earlier, the donor's adjusted basis on the date of the gift becomes your basis. And so you need to adjust the original basis amongst the various assets, generally in proportion to the separate fair market value of each of them as of the date of acquisition. Easier said than done. because, once you've done that, unless you've subsequently obtained detailed information or provided assistance that contradicts that, and you're prepared to prove it, that's it for the time. And you generally are creating a land account, a depreciable land improvement account. That's really not all that common in the timber tax, and depreciable land improvements have a fairly long useful life. And in order to claim depreciation, you have to be filing a Schedule C as a business. And of course, the all-important timber account or equipment accounts, if you're going to be working. Land accounts, are the land itself, non-depreciable land improvements, like the base grade of a logging road, a permanent logging road, not the surface, but the rough cut and fill and grubbing and so forth. As I said, non-depreciable parts of that wouldn't be the earthwork in the nature that creates the base for this, and it's going to be relatively permanent. Timber account is for merchantable timber. In the South, and historically even in Maine, we've had vintage accounts where you place your young growth trees that are pre-merchantable into a vintage account with a maturation date that reflects it going from something non-merchantable to merchantable. And that works. It's whole lot. It's very easy, not easy, but it's important if you do have plantations. As you probably aware, merchantable timber has a variety of measurement terms, historically cords, 1,000 board feet, different log rules that apply, that reflect the nature of timber, sawlog timber in the region of the country. More currently, we've seen more and more use of tons in the measurement and valuation and payment process, even with saw logs and more than just pulpwood and biomass. There are pretty standard conversions of one to the other. You may choose to have depletion units that reflect both pulpwood volume in cords or sawlog volume in board feet, but you also might tend to want to make it convenient to have a single depletion unit measurement tool, like say tons. So you would be converting cords, 1,000 board feet volumes and prices to tons. The process is pretty logical, and it's not all that difficult to secure assistance that way, especially Maine Forest Service. I'm not going to go into a lot of detail regarding filing Schedule Cs, but a Schedule C is a business return schedule. And it's when you're trying or claiming deductions for the day-to-day management of forest property. A lot of these are related. If somebody has a substantial enough property, it's clear that you could maintain and expense a lot of the costs associated with managing that property. It's pretty that you would have an ongoing activity in that process. As I said earlier, once in a while, you'll see somebody with a chainsaw and a pickup truck saying they're in the business, but you don't see any of these kinds of costs associated with managing that. Operating expenses you're allowed to deduct those costs. They're ordinary and necessary to be operating as a business. You don't, and an important thing, if you choose based on your tax situation, you may elect to capitalize those expenditures, because many times, if you don't use it, you lose it. Not talking, there are elements that are involved and don't really want to get into a detailed thing, but property taxes, interest on the payment of loans for purchase and so forth can be prorated accordingly into timber and land accounts that you maintain, that are either potentially deductible or capital costs. Depending on your property, it may well be to your advantage to capitalize many of these costs on a year-to-year basis. And so, moving along, and I'm not spending a lot of time in this. If somebody wanted to talk in greater detail, I'd be happy to talk to you separately, but generally has not been a significant factor in the audience that I've been dealing with these presentations and my clients. The Congress dealt with the concern about businesses, active and passive. Passive businesses like owning a rental home is many of the expenditure, a rental property, many times is not part of your active business, and it will impact what you can deduct or not. Some of the management expenses that are in an investment are subject to a 2% adjusted gross income. Otherwise, if your income is adjusted income is $100,000, any management expenses that exceed $2,000 may be deducted on your itemized deductions on Schedule A. As I said earlier, businesses' expenses are fully deductible if they're legitimate expenses. Your may add your timber basis expenses subject to the 2% reduction to the timber when you sell your timber, so that you're fully utilizing those expenses. You're deducting a portion of it over 2% and capitalizing not. So here's how we really start getting into the meat of thing in terms of dealing with timber sales. How long do you own the property? You got to own it at least a year from in order to claim that it's a capital gain, sale of a capital assets. Your purpose for owning it comes into play, generally speaking, as I said earlier, if you're especially an investor. How you sell it is significant, whether you sell stumpage, you sell it to a forester, you hire somebody to and pay a commission for them to secure it, make sure that it's cut properly, transported properly to a mill, and And that has created a lot of not difficulties, but unique sales now because it's becoming more common. And the only portion of this that's subject to a capital gain is the sale of the standing timber. You're selling a capital asset. Once the timber is harvested, it's like any other product. As you add value to that product, and the difference between the fair market value of that tree when it went down and the value price you receive at the mill becomes taxed at ordinary gains. Potentially timber selling expenses. Generally speaking, the key is the marking and scaling and fees paid to consulting foresters come into play. Some of them charge separately for marking and scaling, and as opposed to overseeing the harvest and making sure you get proper credit for all the timber that's harvested. When we're all done with this, if somebody wants to talk about government payments, I think I'll try to get into some detail, but I got a feeling based on what's happening this right now in our political arena that there won't be a lot of money available for government cost share payments in the foreseeable future. I haven't spent a lot of time researching it, but it would look like fair game for the rather dramatic slashing of government expenses. So I'm going to slide over that. Generally speaking, though, there are situations where these government cost share programs, if they're for conservation and are capital in nature, can be excluded from income. But if they're excluded from income, you cannot capitalize them. Otherwise, obviously, you're double dipping. We encountered a problem over the more recent years that information returns, I'll get into the Form T, but 1099s have become a bit of a problem. There are a 1099-S is the proceeds from real estate transactions, and that generally represents income from the sale of a capital asset, as opposed to a 1099 miscellaneous that is for services, income from services, and the proceeds 1099 gross proceeds on a 1099-S are capital in nature, as opposed to 1099 miscellaneous, which is in fact ordinary income. So if the logger or someone gives you the wrong 1099, you might report it as ordinary income. And many of the tax preparers and in tax preparation software don't split and look at it as carefully as possible, and it could result in a significant error in reporting income as net income as ordinary income rather than capital gain income, which might not be taxable even at all versus the higher ordinary income rates. Depending on who you are and what your capabilities are and your ability, it's important to keep as good records as is possible. And the IRS realizes that not everyone can hire a sophisticated accounting firm to maintain long-term records. Tax rates, ordinary income rates generally, most of us look at, 10 to 15, even 10 to 15%, maybe some higher. But long-term capital gains could be as low as zero. As a matter of fact, many of my potential clients did not become clients because they were not subject to any kind of tax on long-term capital gains because of their income. I just popped this into this presentation and I'll read it. A capital gains rate of 0 applies to your taxable income. If your taxable income, your adjusted taxable income, is less than 47,000 if you're single and 94,000 if you're married. And many people in Maine, rural taxpayers who don't have a particularly complicated financial situation, have Social Security and maybe some sort of 401k and retirement money. But and it's important to remember that 94,000 is not a clear-cut limit. If you had $180,000 in income, 50%, roughly 50% of your income your capital gain income would not get taxed at all. So it's the relationship of this 94,000 in the numerator to your adjusted gross income in the denominator. This is a big deal. And, as I said, many people, and you don't always see that if you're working with some tax software or otherwise. It's a process that there's a worksheet if you did this manually that allows you to do this, and it can have a very significant effect, and especially if your adjusted income is less than $94,000 in a joint return, you may choose to say there's no reason to use your tax basis. You're not required to impute your net gain. You could claim the entire gain as long as the adjusted gross income, which includes the income from the sale of the timber. Stumpage sales, sale of a standing tree is a capital gain. We are seeing more and more sale of cut timber, a capital gain and an ordinary gain scenario. One of the examples I'll have with me is just that I'm going to present here very shortly. Form T is an information report that unique to timber, and I have created an Excel spreadsheet that identical to the IRS form, which is not interactive. It's a form fill scenario. It's not required, but it's really handy to, if in fact your situation supports it, to have it complete. And in the case that I've just described, it becomes a permanent record that, along with a forest management plan and a Form T, you're really set to go. I'm going to share my screen. I'm going to stop sharing. There I am. And I'm going to share a couple applications. All right, the first one is a Word. This is a Word file. It's a it's a case that I just completed. I hope I've got rid of all I just did it this afternoon. References, but I know this gentleman well. He wouldn't mind if it helps anyone else. But what I've done here is create a Word document that if the IRS ever questioned what you did, you could hand them this and say, this is the best I can do. I've tried to explain who worked for me, what I did, everything that's happened. And in this case, I talk about a purchase price. I looked at assessment records to get a general idea of what that original purchase price, especially the non-forested portion of it. So I ended up with essentially $100,000 for land and timber. Those were educated guesses. They were, I am an appraiser and I understand forest land values and timber values. So, this was 100 acres. It had 80, this pretty typical of what you might see here in Maine. There was no formal allocation of the purchase of the forest land and timber because of the lack of an inventory. And I felt that I'd be stretching the limits of credibility to the added cost of that in light of the particular sale wasn't warranted. And I think the IRS, generally speaking, understands that. That might not be the case if we were talking about this $45,000 sale is pretty substantial compared to a lot that I see, 10, 15,000. But what's generally involved is comparing stumpage prices in the year of acquisition with stumpage prices in the year of sale, and create a relationship that will reflect. You can back into effectively a reasonable estimate of the cost of timber in the year acquired, and this data is available. Historic stumpage prices from the Maine Forest Service. Go to their site, publications, and then stumpage, and I use their information for the current year because they undertook the same process in the year that you purchased it with the year that you sold it, as opposed to using your actual sales that might have, we don't know, there might be some hidden costs there to you that would reflect a non an asset or an activity that is not actually the sale of timber. And so I'll show you in the next spreadsheet, but that relationship's applied to the 2024 price to back effectively. I say back into, it's probably inappropriate, but what was paid for the timber. And so if you look at the current price less the 2011 price, you can establish the estimated capital gain and where to report them. I'm going to go into a little more detail when we look at the spreadsheet. So let's see. Share. All right, so we want to look at the All right, this is a spreadsheet. I hope it was pretty wide, so I hope it's large enough. Um, I I have some additional caveats that talk about that go to the element of why we could take it this simple. Um, but one thing that's really important to remember and to advise, I advise my clients and try to make it real clear on the summary sheet that this was done out of necessity and recognizing perhaps some unrealistic costs that the taxpayer might incur in generating an appropriate result. But everything that I talked about is effectively done here in steps, the price, um, and what I've done in this section below, you can see that I have a 2011 price for mixed hardwood pulp and a 2011 price for pine saw logs per 1,000 board feet. Then I have a 2024 price from the same source, Maine Forest Service, and then I compare those. As it turns out, there was a lot of similarity, and it shows that, during that 13 years, um, prices have increased uh, to the point where the original price reflects 80 on average, 86% of the current price, current market value. And so going through that process right along here, you'll see the comparison, the multiplication of the 86% times 45,000. Also, trees grow during that period, and the uh, the growth of the that's occurred has to be reflected to properly reflect um, the 2011 cost basis. Um, so you can see that the cost basis is 36,000 versus 45,000 sales price, the difference being 8,400. This is very simple and it requires some explanation that that you don't double dip here. This can't be ignored, and it's one of the potential shortfall. I used it many times for small sales, and you may be asked to somehow prove that you've not double dipped and uh, the cost basis and the timber volumes cut have to be compared to what you originally had and subtracted to have the proper adjusted basis. So I'm going to ask for brief uh, uh, a brief recess, and I'll be back in 5 minutes. Okay?
Sounds good.
Thank
See you.
you.
All right.
And I will be prepared to answer any and all questions, but
We made a list, held it to the end.
thank you. Okay, I've returned. I hope everybody's here.
Good to go.
I noticed it was 5 o'clock, so I have a glass of red wine to help me finish this.
Perfect.
Okay, what I'm going to go to next is a bit more sophisticated, and try to recommend that people do it with me or without me, but if in fact they've got significant forest land, by that I mean several hundred acres or and so forth, and are going to be in the process of harvesting on a somewhat regular basis rather than once in a lifetime, which was similar to what I described in the first example. The example also reflects making a roadside sale. This taxpayer have some equipment, skidder and the ability to harvest timber themselves. So they were cutting trees and cutting timber and getting it yards, getting it to roadside, ultimately to mills, and it'll be real obvious to you. And the the difference here is, it's some people have been doing that for a long time, but most people don't. A lot of them don't cut their own timber, and so they're dealing with as I said earlier, the sale of a capital asset when they cut the tree down. And that becomes a hypothetical sale because based on perhaps stumpage prices. Then there are real costs associated with getting it transported to the mill and real costs associated with getting it to the road. So the difference between the sales price at the mill and the hypothetical sales price at the when the tree goes down is a reflection of ordinary income. All right, I'm going to share another file. And again, this is actually a client of mine. Okay, let me see if I can move. This is a Form T. And up here in the corner, Form T timber facsimile. It's a relatively simple Excel spreadsheet that lends itself very well to the process of accumulating your basis, reporting, maintaining your depletion records, and reporting your profit and loss. So I have got several sheets. I got acquisition, I've got conversion of what the sale was, a depletion account, very simple, straightforward. And each of these are interconnected as you build and go towards reporting your total profit and loss. You're able to refer back to information you need from the beginning. And then, of course, you can maintain, you can, go from year to year here. So and I can go from year to year with each of the profit and loss and depletion elements, which is pretty handy. Let's see. So the first thing, whoops, I shouldn't have done that. There he goes. He wouldn't mind, but we're talking about, first of all, allocating the purchase price. The the acquisition was in 2023. That this was early 2023, and the sale was sufficiently later. This is a cash taxpayer. They received their cash a year later. They in 2024. I think I've got. Did I say 223? That was 2022. He had a full year. Anyway, they paid $77,000. And there were no additional costs, but there could have been legal expenses that would be added to the basis. There could be cruising and surveying and other costs, legal, so the total cost basis becomes $77,000. Now, what now has to happen is you've got forest land, potentially fields, potentially wetland, potentially improved land, even buildings and so forth. This was the purchase of a woodlot. As I said, the acreage was 113,000. The value that I arrived at was $200 per acre for the bare land. As you can tell, how do I know it's 200? Well, I don't for certain. But one of the things that I generally do know, and people will call it a residual approach, is, do what you know and then see how it compares. This is a little bit of an art. This is the most difficult part of this whole thing. I think some of my earlier comments, if somebody doesn't like what I've done here, I suggest they need to tell me where it's wrong. That sounds a little cocky, but it effectively is the end result. But we knew from, if you look at my table here, I knew how many chords there were. We chose chords as a common denominator. So if you look back at the allocation page, this particular portion is actually the stumpage sale in quantities and prices they got. But I allocated the purchase price based on generally some fairly rules of thumb. You might, as you might know, if there was no inventory, what am I going to do? 15, 20 cords an acre. This was reasonably well stocked, and so the price per unit effectively, I first did the timberland at $200 an acre. Well, let me see. I got to go back to the drawing board here. I had stumpage prices available that were available to me to excuse me for just a second here, fumbling a little, that would allow me to convert average sawlog and average stump and average pulpwood prices to a common denominator. And this $43.89 reflects a composite, a blended rate, which is applied to the total volume in cords to arrive at $54,000 in timber value. Now, what's important here is to stop and try to say to yourself, it's not easy for a newcomer, but if you paid $77,000 for property, did you pay roughly $55,000 for the timber? If you had an inventory and you had stumpage prices, you would say this makes sense. That's what the IRS is going to do. So the balance of 77,000 minus the timber value, which is the most important piece to me, would result in, and as you can see in this formula up here, that's exactly what I did. Is that perfect? No. If I had a good timber inventory, I could really refine this, or a better inventory. And that's one of the reasons that, you know, the numbers are a little different here. I could have kept tweaking this, and tweaking it to make sure that 77,000, but remember that this up here was my fair market values, but I didn't pay fair market value. I paid 98% of it. The fair market value came out to 78,600. I'm sorry I slipped down below when I meant to be talking about it up here. That's why I had 200 and why my numbers are slightly different, but this represented fair market value. A lot of times it's not this close, but so if I paid $77,000, I actually paid 98% of fair market value, and I adjust these accordingly so that the prorated portions resemble the amount actually paid, but they're based on fair market value. It's very rarely ever this close, and I very rarely, you know, in this case, they refused to get a timber inventory, and I didn't demand it. I just told them that, you know, the results will reflect, you know, a level of certainty that I can have based on a guess or based on actual information. And it's an informed guess based on experience. So anyway, the acquisition information is, we refer back to the sheet for allocation. The conversion process, when I involved, I won't go into great detail, but this column reflects what kind of wood they sold. And I knew. And so I knew what they sold it for in MBF and how much they paid and how much it was sold at roadside. So I then converted the volume into cords. 2.44 tons equals 4.88 cords. And the price is, you know, what I also made a conversion to the price that they paid. No, I'm sorry, the price per Maine Forest Service and the price they actually sold, and then how much they got, and did this in a per ton. The price sold per cord was actually 57 50 if you follow the math here. So the gross income was $280 for that particular component. And it was simply totaled that. So, and then in depletion, that was to allow me to get to the actual depletion of what they had initially. As you know, that was my educated guess based on the fact that it was reasonably well stocked. The cost basis is, if you go back to the acquisition line G39, G39.54 there. So these two numbers from the acquisition are transferred here as the basis. They had 1 year of growth, which was at 2%. That had to be added to quantity, but not to cost. And so we had at the end of end of the year before depletion, revised numbers. If you divide the cost by the volume, you get a per unit cost. The allocation had the total volume sold, allocation C30. C30 right here in cords, 189. That was in the stumpage sale. So I multiplied the amount sold in cords times the unit rate in cords to get $8,000 in cost. So at the end of the year, we take your starting balance, subtract growth, add growth to get a number. Then we subtract what was cut to get a year end. Essentially performing the 54,000, of course, didn't change with growth, but we did have $8,000 of costs we took, ending up with a $46,000 balance in the account. So then if you look at the final form, effectively, this is profit and loss from this timber sale, part 3. We're going to try to compute, we are going to compute the capital gain portion and the roadside portion, or the income from ordinary income and capital gaining. So I determined that from the allocation that the amount received from the sale of the timber, in fact, remember that this is a hypothetical. If we went back to the allocation at G30, and then we subtracted the cost basis that we determined just also, we would come up with a total cost basis. There might have been some sales costs involved, but in this case, certainly not. So that the capital gain was only $1,000 from 23 to 24, which makes sense. If it had been an older sale, 10, 12 years, it certainly would have been a much greater gain. Timber appreciates at stumpage increases over long periods of time, 4 or 5% a year, say. And then that cost basis right there becomes the basis for the roadside portion. I go to allocation again at I-30. I-30, right there. This is the gross sale, 11,000. You can see it's there. I subtract the total amount received for the property, which was the hypothetical value that we created. That was at G30. Let's see, G30 on allocation. G30. That was when I was computing the capital gain portion. And the result is $2,000 of ordinary income. I've been cruising right along, and remember that one nice thing about using a spreadsheet like this, we built on these as we went, but I can also, this depletion for the following year, say this year, the ending balances from this depletion, which was 1085, become my starting basis here and so forth. And you can continue to do this. It provides a great record, in my opinion. That generally, unless you were adding costs or creating a new depletion block, you wouldn't, you'd have it readily available, wouldn't need any help. And so I had just superimposed a sale, and you can keep going year to year with it. So I'm going to stop sharing. That's generally it. I tried to focus on the timber sales and some of the elements of acquisition. And as you could see, depending on level of information you have, the information you generate will reflect that. I've never had anybody question in the IRS question any of the work that I've done. I don't think they're necessarily intimidated. I think they've just found that it made sense, and it has to make sense. I also find that a lot of forest owners have a personal relationship with every tree on their property, especially Maine woodland owners, retired accountants and so forth. And that's why many of them like to have a document like the spreadsheet we showed that gives them a permanent record. And lots of them do have a tree growth tax law forest management plan that may include or a plan they received from NRCS or whatever, but that had some inventory information and evaluation of that inventory, which you can grow back or grow forward to the, well, you might have to grow it back to the time that you actually purchased. So, any questions from the audience?
Yeah. Well, Jim, this, I suppose not surprising, this, this is an area that, probably unique knowledge base and
Oh my God, yes.
yeah.
It's
And to,
experience-based, really. I mean, what works and what doesn't is so variable. With a small owner and a significant owner.
but my sense is that it would be difficult for the average person to get this right, or as right
Um,
like to without finding somebody like you, to at
well,
least
I
build the
I
framework.
think I think that if they were to listen to this video and realize it doesn't have to be perfect,
Right.
you can't let perfect get in the way of good. Who said that? Somebody important, I think. Maybe it was my father, but um, I think that um, I don't have to do everything for anyone. Somebody who works with a spreadsheet for any reason could take this and superimpose and make, I got to do this. And, it might take a phone call or whatever, or a little advice from a forester if you have um, access to a main forest service, what do you think the volume of this on this property? And, they'll be hesitant, but because they're worried that it might be the IRS, but that's involved. But short of hiring them to conduct someone to conduct a very thorough and detailed timber inventory and value, there's no choice. And the alternative is not claiming any cost basis and uh, losing out on that particular benefit um, when it comes to the end. Yeah, clearly the smaller the sale, the the less demand there is for improved accuracy and so is it um, possible? I find that a lot of very active landowners, um, gen a lot of these are retired, like I said, retired with experience and just had some sort of business expense, are able to find their way through this. You certainly can't depend on accountants. Generally speaking, mom and pop tax preparers, and there's certainly no help when it comes to the tax software that's out there. That can actually be a help a harm if you don't report the income properly on a 1099-S. And loggers and others don't always send you the right 1099, and it can create a host of problems.
Yeah.
And as you may well be aware, I mean, there's millions and millions and millions of 1099s out there. It's a tool that the IRS uses to make sure that income's reported. And if somebody wants to claim that income as an expense to you, generally speaking, they need to create a 1099. But obviously, the IRS has got millions of these to deal with, some of them in millions of dollars. There's no specifically telling where it will end up.
Right. Yep. Well, it seems to me, and it sounds though you have offered that to the extent that we have an interest, which we do, in getting just some of the initial framework put in
Yeah,
place,
yeah,
uh, and a better understanding of what we should be capturing and
right.
perhaps capitalizing on an annual basis. That if we came to
Mhm.
find you, you might be able to help us put that model together and something that over
Oh,
time.
you
Yeah.
know,
Yep.
I I there's a lot of fill in the blanks here.
Yeah.
My templates are uh, not patented. I'm more than happy to share it.
Yeah.
It's worked well. It's not, I don't think it's sophisticated. I think it saves a lot of time and trouble and, no mathematical mistakes and the ability to have, a semi-permanent record to deal with. So lots of times that's just what I do. I set up the framework and help you make some decisions in terms of depletion blocks, and is it going to be advantageous to have multiple depletion accounts or just a single depletion account?
Right.
I have a very substantial client, 5,000 acres, that he and his forester originally felt that we should create depletion accounts for his 12 properties, all in the same general area, and they could. And so we had inventories done. Oh boy, it was very complicated. Took a long time. This was 5 or 6 years ago. And he makes, because it's 5,000 acres, they make sales pretty regular. He asked me this year, said, Jim, is this really necessary? And I said, no, it's not. It's what you wanted. And he said, well, I want different now. And this is a person of means, obviously. And he said, I want you to put it all in one package with one depletion rate. I had like 5 different depletion accounts per parcel. So that's like 60 total. And it was very, very detailed. But one of the problems we encountered with that is because he had 12 properties, you hired somebody to cut on 4 of them. We didn't know. He didn't know, and they wouldn't tell him, exactly how much wood came off which
Where
parts.
it was coming from. Yeah.
So, all that sophistication and what do you got? So it doesn't always work well. I'm not looking forward to talking to the forester who recommended it to begin with. He meant well, but the owner was a very sophisticated businessman, and he could see through, some of the shortcomings of doing that. So,
Well, our interest would be getting it right up front, and I think if we spent some,
yes,
we have a far better chance of doing that. And then accumulating over time.
yes, oh, absolutely. And
Good.
many times, like I said, I don't know if you are a forester or have had foresters involved in a variety of capacities, but when they know they're not going to be quoted for a tax information, and why don't you ask Jim Norris, and that'll take 10 minutes. They're much more. I would end up maybe talking to them anyway about inventories and value and markets and so forth. So, it becomes a collaborative effort to do what's best at a reasonable cost. I'm not trying to earn a living doing this, and in a weird sort of way, I like doing it. That shows you.
Yeah. Well, this has been awfully helpful.
Yeah.
I come away, not so much fully, able now to do it, but I think I'm much better. I have a better understanding of broadly what is required, and
Oh,
important
absolutely. I hope so.
resources, kind of importantly available as we think about how we do a better job beginning to kind of organize and accumulate this. And so thanks for.
I think that the pitfall, there are 2 pitfalls. You could try to do it, spend too much money trying to get it right, or not enough to have anything that's really useful. I mean, how many total acres do you have?
Perhaps 2,500.
Yeah, I mean, I would say you're, bigger than the average uh, woodland owner,
Yep.
and I don't know the resource. You said there's a lot of maturing timber on this property, so it's the future. You sound relatively young, so
Thank you for that. Yeah.
I'm 75, so you're young to me. And I end up having some, this program is very similar to what I do when I'm actually consulting with somebody.
Yeah.
They can pull a plug, they can say, gee, do we really need to do this? Do we need, and having a fairly knowledgeable client who's willing to step up and take some of the responsibility makes it a whole lot easier
Yeah.
to for you to get started on the right foot. So
Yep. Well,
I
good.
guess maybe to be continued.
Well,
My
yep.
guess is
We'll
that
reach out.
I'm more than happy. Once it gets into May, I'm fishing and
Uh-huh.
golfing a lot. But I do think that I have plenty of time, and it's at I can be at your disposal, and you can be assured that we'll do no more than we actually have to do.
Yeah.
So
Well,
with that,
great.
I'm
Look
going
forward to following
to
up.
close this and look forward. I hope we get a chance to work together.
Yep. Look forward to it.
Okay, bye now.
Thanks for your time. Bye-bye.